Welcome to Talk Tickers, where we break down the earnings that move the market. Today, we're diving deep into Brookfield Infrastructure, ticker BIP, and their third quarter results. We're going to get into the numbers, unpack what management is thinking, and figure out what it all means for the stock. So let's get right to it.
You know, the big question hanging over BIP right now, the one everyone's asking, is this. Is it still that classic super stable infrastructure company we all know? Or is it quietly turning into a massive AI growth story? Well, this quarter's results give us some really fascinating clues.
So, first things first, let's look at the quarter at a glance. The big takeaway here? It was just solid. A really competent, well-executed quarter that landed pretty much exactly where the market thought it would. No huge fireworks, just steady, reliable progress.
All right, for a company like this, the number you really need to watch is funds from operations, or FFO per unit. They came in at 83 cents. Now, what makes that number so impressive is that it's actually up 9% from last year. And that's really strong, especially when you remember they've been selling off a bunch of their older, more mature assets.
Now, you might have seen some conflicting headlines about the results, and this slide really explains why. See, BIP reported 83 cents, which was right at the bottom end of what Wall Street was expecting. So depending on which analyst you follow, this was either perfectly in line or maybe a tiny miss. But you know what? The market basically said, yep, that's good enough for us.
And when you look under the hood, the business looks really healthy. I mean, you've got strong top-line revenue growth at 13%, and for all you income investors out there, another reliable 6% hike in the quarterly distribution. This is just classic BIP, right? Grow the business and share that cash with investors.
Okay, so let's dig into the specific parts of the business, because this is where the story gets really, really interesting. While most of the company was just chugging along, the data infrastructure business, well, it absolutely stole the show.
So, transport and utilities, they're still the biggest pieces of the puzzle. They provide that super stable foundation. But just look at the data segment, pulling in $138 million. It's not just some small side project anymore. It's a huge piece of the pie. And as we're about to see, it is growing like crazy.
Get this, a 62% jump in FFO from the data segment compared to last year. I mean, that is just explosive growth. And it's all coming from new data centers coming online and getting the full benefit from their massive cell tower portfolio over in India. This, right here, is the engine for BIP's future. So you're probably wondering, okay, where is all the money for this growth coming from? Well, it all comes down to management's core strategy. It's a really disciplined playbook they call recycle, reload, and reposition.
It's actually a brilliant cycle. First, they sell their older, more mature assets. We're talking over $3 billion worth just this year. Then they lock in these fantastic returns, usually north of 20%. And then, this is the key part, they take that cash and redeploy it into their new high-growth stuff, like data centers. It's basically a self-funding growth machine.
And here's the big signal, coming straight from the top. The CEO, Sam Pollock, he's not just talking about digitalization in general terms anymore. No, he is explicitly pointing to a growth runway that's being accelerated by AI infrastructure. This is management basically screaming to the market that the game has changed and the opportunity is way bigger than we thought. And hey, this isn't just talk. They are putting their money where their mouth is. They set up a massive $5 billion partnership with Bloom Energy to provide power directly to data centers. They've already locked down their first big project and are planning to pour $500 million a year directly into AI infrastructure. The pivot to AI is real, and it is happening right now. Okay, so that's the company's story. But how did the market, how did investors actually react to all this news? Well, in a word, they were reassured. You know, they weren't blown away, but they definitely were not spooked.
The stock popped about 2.5% on earnings day. Now, that's not the kind of jump you see when there's a huge surprise. No, this is the market basically nodding and saying, nice quarter, you're doing what you said you would, keep it up. It's a real vote of confidence in their execution.
And this table really captures what's going on perfectly. You've got management on one side pushing this huge transformational AI growth story for the long term, but the market on the other side reacted to the here and now, to the solid, reassuring results of today. So while management is busy building the future, the market is rewarding them for delivering in the present.
All right, this brings us to my favorite part. Let's put on our analyst hat for a second and actually pitch the trade. Based on everything we just saw this quarter, what's the actual move from here?
So what's the play? How do we position ourselves for what's coming next quarter and even beyond that? And maybe more importantly, where's the opportunity that the rest of the market might be missing right now?
Okay, here's the pitch. The core idea is that the market is still pricing BIP like it's that old, slow and steady company. It's totally underappreciating the massive jump in cash flow that's coming from this AI pivot. The things you need to watch are the final closings of those big acquisitions they made and any real news on those Bloom Energy projects. My prediction? A beat on FFO next quarter as these new assets start contributing fully. And as that happens, this AI story is going to get more and more attention, and we'll see the stock start to climb back toward that $40 mark.
So the rating is outperform. All the pieces are falling into place for this growth story to really kick into high gear, and I just don't think the current stock price reflects that potential.
And of course, please remember, this content is for informational purposes only. It is not financial advice.